Hey, this is Mike, and I wanted to talk about the election because it's Saturday morning right now, and the election is essentially two trading days away this upcoming Tuesday. So, obviously, there's a lot of volatility in the market, and if you trade options, you may be wondering, well, what should I do to play options on elections? Because the market may move a lot, and obviously, when there's a lot of volatility in the market is already expensive. So, here's just a trade idea that I am looking at right now. Now, as we know, if you trade options, market volatility equals expensive options. Right now, the implied volatility on the SPY is like 87 or 88% right now, the implied volatility rank. So it's really, really high. That means options are really, really expensive. And we also know that 80% of options expire worthless. And this is in all IV situations. It's just you're more likely, if you buy calls or puts straight, you're more likely to lose money and lose all of your money if you hold on until expiration. Therefore, in times like this, people tend to overprice options when there's high implied volatility. That's why experienced option traders tend to sell options instead of buying them. So now that we know that everything's volatile right now. We've had a falling market. We have a lot of uncertainty with the election and the possibility we will not know who will be president on election day, and there'll be a lot of challenges with the ballots. It's going to be a lot of volatility. And so, how do you play that with options? Well, you're probably going to want to more likely sell options. So, I just want to give you a trading idea that I'm looking at, which is to do an iron condor on the SPY, which is the S&P 500 ETF, on like a delta 35, and that gives you like 5% of cushion between the current trading price. So the current trading price, let's just assume it opens on Monday at 327, where it closed on Friday. Um, at that point, you want to look at opening an iron condor, which is basically two credit spreads, a put credit spread and a call spread, and give yourself a 5% cushion from the current price. So if the current price remains at 327, you'll look at going down to selling the 313 puts and buying the 310 put. Then you want to go up 5% and you want to sell the 342 calls and then sell the 345 calls. So you go 5%, you give yourself basically a 5% cushion up and down. And this is options that are going to expire 45 days from now. So these will expire, these are options that expire on December 18th. So it gives you about, it's close to about 45 days. And this is currently priced at a credit of $1.90, or you collect $190 and you put up a collateral of $300. Now, when it comes to options, I would close at 50% profit or $95, or close 21 days after opening the trade. Because what I think is going to happen is we will get a lot of volatility, but because these options are so expensive, chances are the market may not move up 5% up or down from its current market price. So because of that, you can definitely take advantage of an iron condor. And this is, collecting $109 is based on just buying one contract of each leg of the iron condor. So if you want to collect more than 190, you just sell two put options, buy two put options, sell two calls, and buy two calls. But based on one contract per leg, you're going to collect $190, and then I would target a 50% profit or $95, or just close it after 21 days, no matter what it does. I would not recommend taking the iron condor all the way to expiration because you get gamma risk during the last week, which means any movement in the stock market gives you a lot of volatility in your puts. And when it comes to iron condors, you basically want volatility to go down, not go up. So what you're assuming essentially with this iron condor is that volatility is about 87% right now. You're going to assume that volatility is going to go down within the next 21 days, which is more likely to happen because there's not much more volatility that you can get in the market right now. So if you're looking for an options play to deal with elections and the fact we have high volatility right now, I would say look at an iron condor and give yourself a 5% cushion up or down. And with the expiration 45 days from now. So look at the December 18th expiration. So I hope this was valuable for you. If it was, be sure to leave a like and go ahead and subscribe and turn on notifications. I do multiple updates each day on stock trading strategies, as well as options and option trading strategies. Okay, thanks a lot.